American investor out of billions of dollars every single month.
Bob, there's been conversation about, and there's been talk about the actual physical market decoupling somewhat from the futures and the paper market for gold. How, in your eyes, is that progressing? And at what point do you think that there's a split-off point where they actually lose control of it because of the failure of the paper derivatives as it relates to precious metals to truly be representative of what's out there? No, we've been moving in that direction for a while, but what's the progress there?
Well, it's hard to say. We don't know. It will happen. I can't give it any timing. I don't know what the event will be. More and more foreigners are going through physical. They're going into the LBMA in London and taking delivery. They're going into the London fixes and taking delivery. And some of them are taking delivery on the COMEX, but not as many. And there will be a physical shortage of gold, there's no question, and silver too. It's only a matter of time. I don't believe the ETF, GLD, and SLV have the gold that they say they have. I think they're using derivatives, and I think they're lying about it. I think they've lent gold and silver to the United States government to cover their short positions. And I think that there'll be a major scandal somewhere down along the line with GLD and SLV, which are exchange-traded funds. And I also believe there'll be major scandals on the LBMA as well as COMEX. And that will bring the futures and derivative markets to a halt. And then it will be only physical and the shares. Anybody who has gold certificates with any kind of a company, get rid of them and take delivery. Gold and silver stocks should be fine. They'll perform very well. Numismatic coins will come into their own, but they have to be mint state and graded, and they will do very well. And of course, gold and silver bullion will go up. And the government is well aware the gold is headed up to 7,000, 7,500, and every time they knock this thing down, they buy more and more physical for themselves. And they've been doing it ever since gold was $250 an ounce. And you know, when they had the big sales back in the early 90s, the biggest buyer were the Rothschilds.
Yep.
And they said they were buying for clients, like a newsfeed, they were buying for themselves. And it wasn't long after that, a couple of years later, that the Rothschilds left the London gold pool, which is the physical gold market in London that fixes prices twice a day. And they left that, and they had been in that since 1694. And so, as you can see, there's something very, very big going on.
Yeah,
the only place
eyebrows were raised over that for sure.
The only place that you can preserve your assets is in gold and silver, bullion, coins, and shares. There is no place else to go.
And you're given a heck of an opportunity to do just that now as these prices are being pushed down by this manipulation. If you missed the first call, or you didn't take it seriously, or you thought perhaps there was a recovery coming, well, guess what? You've been given a second chance.